All right, everyone. Well, good day. This is Steve Jackson. I'm the Senior Vice President of Broker Concierge here at PrimePay, and I want to welcome you to one of our monthly broker webinars. It's been in a series here all year in 2019, and today's topic is on the red flags and what you can look for with non-discrimination testing on your brain, right? I'm sure you guys have been waiting all day for this particular webinar. I jokingly have said here internally that I should recommend that everyone get out their Mountain Dew and coffee or any caffeinated beverage while I go through the topic here today. Well, not entirely. Listen, we're going to make this today, as we do each and every webinar throughout the year, we want to make this practical. You are sitting in a wonderful position, as a trusted advisor, as a benefits broker, consultant, as you're strategizing with your clients each and every year as it relates to the benefit programs that they offer. You should be able to recognize when an employer and the strategy that they're wanting to impose, whether they're taking you down a path that could make their plan fail non-discrimination testing. And so today, we want to provide some of that practical advice, okay? I do not want to go through all the formulas. We're not going to go through physical calculations here today for each of the tests, but I want you to be aware. We want you to be able to see those specific red flags that are right in front of you that enable you to act more quickly, proactively, rather than reacting months down the road once the plans have already been implemented. And now certain changes must persist from there. So today, we want you to look for red flags as it relates to non-discrimination testing. So I'm excited to be able to bring this specific topic and content to you here today. Throughout the webinar, I do want to seek your questions, okay? I want to see them, all right? So go into the GoToMeeting menu bar, go ahead and type in your question at any time, okay, throughout the webinar. I'm sure there's going to be some. Now, I may not be able to fully address them here today during the webinar. So what we will do is that we will follow up with you directly so that you get the full answers to the questions that you need addressed. All right, so please, as I'm going through, go into the GoToMeeting menu bar to the question box and type in your question here at any time. All right, so I've got a lot of content. As you guys know, we try to cover a lot, right? Here in 30 to 45 minutes, we're gonna really tackle it. I'm gonna cover these 6 items with you today. First, I need to lay the foundation, for you. We need to talk about the basics, all right? So I wanna lay down it's a couple slides that's going to really hone in on the basics of non-discrimination testing. We also wanna cover what specific plans are subject to non-discrimination testing. And then I thought it would be important for you to see it, by plan. Well, what are the applicable tests, for each plan that my employer is adopting? And I thought that would be helpful for you to see the actual test. Again, we're not going to go through the physical calculations. I think you'll thank me for that later. And then the last few items really is going to talk about, okay, failures do exist. They're going to occur. They happen. It happens, right? So what is the result? What can be the result of a particular failure that does occur? I mean, ultimately, you do need to understand that there are solutions. That failing a test, if done timely, those can be corrected, okay? Because we want to ensure that every plan passes, right, by the end of that plan year. And then lastly, to summarize a lot of what we will discuss here today, we're gonna talk about those specific items, those red flags, those things that should perk your ears up, should give you pause as you're talking with clients and as you are implementing specific plan design strategies. So we're first going to go into the basics. So non-discrimination testing, you'll hear me phrase that as NDT, and that is, again, just non-discrimination testing. Let's cover the basics, okay? So When you think about specific strategies that are out there today, you hear about Section 125 plans, you hear of Section 129 plans, which are dependent care accounts or health FSAs. You offer self-funded benefits, or your employers are adopting self-funded or self-insured benefits as an employer. And so the IRS has said, look, we are going to provide to you, employer, ultimately to the participant as well, the employee, the ability to offer a tax-favored strategy or a tax-advantaged account, okay? But if we give you this kind of loophole, okay, we give you this opportunity to do that, to gain on those tax savings, we need you to follow the rules. Now, there's a lot of rules, okay, but one of those rules is a required annual non-discrimination test. So, all right, so what are the ground rules for NDT? First and foremost, the first bullet there that you see, it's required, right? So it is a required annual test. Each test, each year, okay, must be tested. All right, now there are a couple safe harbors, and I'll cover those briefly then with you, that may enable an employer to avoid some of the test, okay? But all in all, tests are required, and they're required annually. They're required so much to say that, listen, you need to perform the test, and you need to make sure that your plan is going to pass by the end of that plan year. So NDT specifically focuses on ensuring equality, right? The IRS again says, look, you're going to get this tax savings. For you as the employer, you're going to benefit, your employees are going to benefit, but we need to make sure that the eligibility, the contributions, and the benefits that you are making available as an employer, that they're being offered on a non-discriminatory basis to your highly compensated employees as well as your non-highly compensated employees. And so just to say it here, possibly different here in the last bullet, NDT was really designed to prevent employers from solely providing tax benefits to the highly compensated employees and encourage them to give benefits to their rank and file, right? So you guys have had many conversations with your clients, and clients, employers are, oftentimes, right? They're taking you down a path. Okay, here's what I'm thinking. We'd like to offer a benefit strategy, but it only is going to go to these 5 individuals in our company, right? And so you can see it, right? Red flags should be appearing, in your head and visually, in regard to that conversation, because non-discrimination testing is really that avenue, that process, which says, well, look, we want to ensure equality. We want to make sure that that rank and file employee has kind of that similar chance, okay? Doesn't have to be completely fair, right? But that it ensures equality, okay, amongst all of the employees, regardless of their specific title. There is what's called a prohibited group as it relates to NDT, and this does not necessarily mean that this group is prohibited from participating in these benefits. Now, there are certain ownership rules, sole proprietors, 2% or greater shareholders in an S corp, right? We can provide that list that those some of, depending on the plans that are being offered, they may not be able to participate in those plans, right? But this prohibited group is really focused on a group of individuals or a group of the population of the employer in which they would be generally conceived as, or fit the definition of, a highly compensated employee, a highly compensated participant, or a key employee. Okay, so these would be at least those employees that are kind of be segmented out. Okay, we need to define exactly who fits these various definitions. So when we perform the test, it's necessary to know, well, who is this? Who fits these definitions? One thing that I want to point out is that, and I do have a bullet there, the definition changes whether it's a Section 125 plan, a Section 105H, that's for self-funded plans, and then Section 129, which is for dependent daycare. So an employer could be offering a self-funded medical benefit or an HRA, a health reimbursement arrangement, could be offering a cafeteria plan under Section 125 and be offering a dependent care account, okay? That's actually quite normal, right, in today's day and age. And the testing, the definition of the key employees or highly compensated employees or participant will differ for each of those specific component benefits, okay? So it is important to note that accurate compensation data from prior and current year is really key to identifying HCIs, HCEs, or the HCPs, and certainly the key employees. And those are all stated in that fashion because, again, there's no uniformity here in the tax code. So each Section 125, they define it more as a highly compensated, employee, and a 105H is going to classify them as a highly compensated individual, so on and so forth. So that's why we have those various acronyms. So who do you include in testing? We get that question quite a bit. We may have the prohibited group. We might need to list those officers, directors, owners, highly compensated employees of a company, but who should be included in the testing? And generally speaking, right, we're looking at all employees. We're looking at all employees, and that can be including part-time, and also those employed by a commonly controlled group. And I'll talk about that here in just a couple slides from now, just to point some light to that. The group to include or exclude will vary by the plan and may vary within the test or even the subtest. So there clearly could be groups. Maybe it's a union versus non-union, and in this particular group, union is excluded, from the test based on various parameters, right? So it's important to note that generally all employees are going to be included. That the population of employees is going to be included as part of the test, but a certain group could be included or excluded based on that specific test. All right, I want you to understand just a few themes. There is a constant, consistent theme when performing non-discrimination test, and there's three areas here. You have eligibility, you have benefits, and you have utilization. So I want you to think of these themes kind of with a party example, like you're going to a party, right? But in this example, this party is where the guests that come to the party, they get to save on taxes. All right. So it's a party where they come, they can save on taxes, right? So just go with me here. All right, a little bit. So eligibility. Why is this important? Well, if enough non-highly compensated employees can't get into the plan, okay, it's going to be considered discriminatory. So eligibility asks the question, using the party example, have enough non-highly compensated employees been invited to the party? Whom have you invited to partake in these benefits, right? Because that number matters, whether that is more highly compensated versus non-highly compensated employees. So that's eligibility. Benefits. If the highly compensated or key employees are able to get more benefits than the non-highly compensated employees, then that is going to be considered discriminatory. That is often considered the contributions and benefits test, but let's put it into the example of a party, okay? This party again. Think of the various benefits as being appetizers, okay? So what the benefits theme does is it asks this question: who's being offered appetizers at the party? Think of this. You might have multiple rooms at your party, right? Some guest in one room gets the pigs in the blanket, whereas guests in another room have another set of appetizers, right, that they are being offered, right? So it's important. What benefits kind of asks the question is, well, who's being offered those benefits, all right? And then lastly, utilization. If the highly compensated or key employees take more benefits under the plan, then it is found discriminatory. So utilization asks the question in my party example, who's actually partaking in those appetizers? Who's consuming those benefits that is being offered? So what we really look at here is three different things. When we look at the different tests that are offered for each of the different types of component plans, These three areas are going to be really the focal themes that non-discrimination testing is focused on. That last one is tougher for smaller employers, utilization, right? So who's actually consuming the benefits, right? So it's most challenging for smaller employers, where maybe those highly compensated employees, well, they have the funds, they have the dollars, the means to be able to consume, more of those benefits. All right, lastly here, I just wanted to touch on controlled and affiliated groups, not to spend a lot of time here, but do keep in mind that when performing a non-discrimination test for an employer, that we are just not looking potentially just at the group that you specifically are helping provide benefits for, okay? If that employer has a common ownership or control between other entities, which could be like a parent subsidiary controlled group. It could be a brother-sister controlled group, so on and so forth, right? So if they happen to have other interests and ownership and control in other entities, well, then non-discrimination testing is going to begin to look at more of the entirety of the population in those other affiliated companies. So you would not just perform the test on that one specific entity that you are actually, maybe you're working with. I mean, maybe you're not even the benefits consultant on, the other EINs, those other employers, but yet when performing non-discrimination testing, they would be included. So something to consider there. So let's look at the specific plans that are subject to non-discrimination testing, all right? So what you guys see out there day in and day out, right? Employers are offering a group health plan to their employees, and the employees are going to share in the portion of that premium cost, right? So there's going to be a payroll deduction, and that employer would wish that that deduction would be taken on a pre-tax basis, all right? So the IRS has said, fine, that's great. You can do that all day long. That's going to fall under Section 125, so also known as a cafeteria plan, also known as a POP plan, premium only plan. And so that Section 125 would require some tests. And I'll go into a little more detail here, just on that here in the next slide or so. Dependent care. Dependent care falls under Section 129. And there's actually independent tests that would need to be performed specifically to DCA or dependent care accounts. That's part of an FSA. Then you have kind of a larger group here, right, that fall under self-insured plans, self-funded plans by an employer. Some of the known ones are certainly a self-funded medical plan benefit, a group benefit that the employer offers, but it's self-funded. It could be a self-funded dental benefit that could be included as well, as an example. But it also is going to include an HRA, a health reimbursement arrangement, right? That's going to fall under Section 105H. Under that statute. And then also consider a health FSA is considered a group health plan, and it is considered self-insured. And so a health FSA for testing purposes actually do fall under Section 105H, all right? And then the last two, they're very infrequent. In fact, Prime Pay, we don't necessarily even provide the service, non-discrimination testing for group term life or adoption assistance. But do note that, maybe in rare instances where these are adopted, as far as utilizing the tax favored status under Section 79 for group term life and Section 137 for adoption assistance, then non-discrimination testing rules would apply. I thought this this next chart would be a great way for you to visualize what the required tests are by plan. I would bore you to death if I were to sit here and kind of showcase the actual formulas that you need to go through, all right, to perform these tests. But I think that it's important to note that each one of these component benefit plans is going to have its own specific test. There is not just this one test, if you will, that will actually let all of these go away if you pass this one test, right? So let me just go through this here, and I think I'll paint a picture here a little better for you. So going from left to right there, the cafeteria plan POP. So when you look at non-discrimination testing under a cafeteria plan, where an employer is, allowing their employees to pay for their medical premiums, group premiums with pre-tax dollars, there's actually 3 tests that need to be performed. There are eligibility, contributions and benefits, and key employee concentration. So as you look at the top, right, you can kind of begin to see the themes, right? The eligibility, the benefits, the utilization. It's all focused around those main themes of non-discrimination testing. Now, I do want you to note that under a cafeteria plan or POP, that the employer would only need to pass the eligibility test, and if they pass, that is considered a safe harbor, which would enable them to, or it would remove the need to perform the final 2 tests, the contribution and benefits and the key employee concentration test, okay? So, but I still said that there was a test, right? There still is. So an employer just can't establish a POP plan and say, we're good. No, you do need to perform that eligibility test. And then that will help determine whether they need to perform the contributions and benefits and key employee. Health FSA, again, that's a self-insured plan under 105H. So you see that the testing for Health FSA is very similar to the group term life, the self-insured plans, very similar to those as well. So there's 2 specific tests for eligibility and benefits for the Health FSA. All right, so again, each one is independent, and there is a pass or fail element for each of those tests. Next is dependent care. So within dependent care, there are 4 tests involved for eligibility, contributions and benefits, more than 5% owner concentration, and then 55% average benefit. Group term life, self-insured plans, those are also going to include the eligibility benefits for both of those. I show all the way over to the right, fully insured plans. There's not the specific NDT test for a fully insured plan. Now an employer, though, may adopt a fully insured plan, right, for their group medical or dental or what have you. And if they're having the premium contributions taken on a pre-tax basis for their employees, then of course the Section 125 or cafeteria plan test would need to be done, right? So not necessarily meaning that just because an employer offers a fully insured plan, that removes all consideration. They don't even need to. Just talking specific about that plan in particular, all right? And then adoption assistance, there are 2 separate tests. Again, that's very rare that employers adopt that just due to the tax nature of that and such. So what I want to point out is many of your clients have the cafeteria plan option. They also offer a health FSA, and they also offer a dependent care account, and right, they potentially also offer a self-insured plan. So you could see there that between the cafeteria plan, health FSA, what is that? So 5, 9, 10, 11. I mean, there could be 10 to 11 different non-discrimination tests that would be required just for that employer based on what they were offering their employees. All right. So when should NDT be performed? Also, a very strong question that we receive from our brokers and certainly from our clients. So a lot of what we are going off of today are the proposed regs back in 2007. Yes, the IRS has not finalized these, but we are in essence told we need to be moving forward, with these 2007 proposed regs. So that's where a lot of the current non-discrimination testing requirements, what they are based off of. And so what it says in those regs is that it needs to be performed by the last day of the plan year. Okay. So that's a very easy statement to make. Sounds about right. Hey, you need to perform it by the last day of the plan year. But what's even more important is that you must pass it by the last day of the plan year. So if you are performing this test at the end of a calendar year, at the end of your plan year, when there's no more time administratively to make the adjustments or corrections to actually enable that employer to pass a test, well, that's not good either. So a best practice tip is for employers to perform their test mid-year. Not required to by any stretch, but a mid-year test enables an employer it provides ample time for the employer to understand kind of where their issues may be. Maybe they pass all the tests, maybe they come close to failing on one of the tests, so they just need to know that. You know, if their employee population changes throughout the rest of the year, they just need to be considerate of that. And so they do, performing it mid-year enables that consideration if you have a higher turnover type of a company, you know, or just a lot of new hires coming into the population, certainly if there's any merger and acquisition activity that may be there. So NDT should be performed, yes, by the last day of the plan year, but more importantly, they need to pass by that last day of the plan year. So, you know, so let's talk about that. So are they always going to pass? They're not. They're not. We have many employers running simple health FSAs or dependent care accounts, and you know, we could still have a good bit of those employers fail certain types or certain ones of those tests that are part of dependent care, because there's 4 individual ones. So what are the results of failing? What is that? I guess, what does that mean? You know, what does that result in if you fail? So under a self-funded, so if you fail the test, and if you failed the test, meaning you not only failed, but you didn't do anything by the end of that plan year, you didn't make any corrections, and so you just failed your test. Well, these are the types of results that are going to occur if you don't do what is needed to correct it. And we'll talk about solutions and how to hopefully pass that NDT. But under a self-funded plan, if a highly compensated employee, so I'm sorry, if the plan fails the non-discrimination test, then the highly compensated employee, they are going to have to include the excess reimbursement. You know, so let's say they got reimbursed, you know, $4,000 in their dependent care account, but they failed their test. I shouldn't say that. So say in a health FSA, this is for self-funded. So for a health FSA, then those reimbursements would be considered taxable income to the highly compensated employee. You'll start to see a theme here. So under Section 125, if they failed their test, the highly compensated participants will include their elections and possibly reimbursement into their taxable income. For dependent care, highly compensated employees will include all dependent care elections in their taxable income. Under a health FSA, highly compensated individuals will lose their income tax exclusion on benefits paid, and that's part of that excess reimbursement. So you see a common theme here, right? So if an employer fails their test, the folks that kind of get it, well, get it badly, right, financially, is going to be the highly compensated employees. Nowhere do you see what I just stated where the non-highly compensated employees would be affected in any negative fashion. So the results are really focused when an employer fails one of their non-discrimination tests, does not do anything to pass, but they do fail, then these types of results will occur. The highly compensated employees will probably have a higher gross taxable wage because of it. But let's look at some solutions. I mean, if you perform your non-discrimination test kind of in the middle of the plan year, then you should be able to have an opportunity to make some necessary corrections, right? To be able to then pass that test, take it again, pass that test by the end of the plan year. Because you want to make sure that by the end of that plan year, any test that you're subject to, you're good. You passed it. You know, you'll manage that with flying colors. So what kind of solutions are out there? Well, I guess let me say this. Do understand that there are solutions, that employers are not left with nothing, right? I mean, at the end of the day, they desire to expand their benefit offerings. They want to include a Section 125, a cafeteria plan, part of their program. They need to include a health FSA or a dependent care account, right? Or a health reimbursement arrangement, you know, to their employees to cover some of that expense and burden of the deductible expenses and so forth. So it's important to note that if you fail, that's not the end of the road, that there are solutions available. So each of these, you'll see, I'll kind of touch on the test failure and then the solution. But, you know, the first is eligibility, test failure. So you remember my example, right? Who is invited to the party? Who did you invite, employer, to the party to partake in ultimately these benefits? So, solutions could be, well, all right, maybe you should expand your eligibility. Maybe you should increase the number of your non-highly compensated participants, right? So increase those numbers, maybe include more employees if you can into the program. Yeah, which of course also in turn, well, if you can't do that, well, do you have the ability to decrease the number of highly compensated participants? Okay, so, and that could go towards limiting eligibility. It could be saying, well, listen, we're just going to auto enroll everyone into this, at 100% employer paid options, and that that might work. Now, that doesn't necessarily work with a health FSA or other things, so you do need to be cautious about that last this auto enrollment feature, but could be potentially a solution that could be offered. Under dependent care, we see failures, non-discrimination testing failures quite a bit, okay, with daycare, with the daycare account, all right, happens certainly more frequently. And so that might be, and I'll just cover the decap here, failures. You could prohibit the highly compensated employees from electing coverage, which sometimes that's what you have to do, depending on the number of actual non-highly compensated employees, the rank and file that are participating in that dependent care benefit. Or instead of offering the full amount, say $5,000 for the year for the highly compensated, maybe we have to limit them. Maybe, sorry guys, gals, if you're considered highly comped, but we're gonna have to limit you to 2,500 or 1,000 or 3,000. I mean, whatever the number might be for them to successfully pass. We also might prohibit those owners who are greater than 5% ownership from electing, or limit those with greater than 5% ownership, to a certain percentage of the non-highly compensated election that would have. Also under Section 125, those failures, certainly you'll see some common themes here. Is there a way for that employer to increase the participation among the non-highly compensated employees? All right, so maybe if it's a smaller employer and we just can't get a great subset of total employees like rank and file, maybe we need to have the highly compensated employees pay their share with post-tax instead of pre-tax, right? So I'm not saying that that's always going to happen, but it could be something, or at least it could be a reasonable solution for an employer to pass their test. And certainly, but it's drastic, but it's do not offer a highly compensated employee, maybe all the options. Maybe you're limiting their options. Maybe you're only providing appetizers, just a few for them, but the rank and file, they get so much more, right? You can always discriminate in favor of the rank and file employees, the non-highly compensated employees. So you could always do it that way. And then the last one here is 25% concentration test. Again, ways to do that would be to prohibit the key employees from electing, just electing at all. You could look at post-tax options. You could avoid, where employers are covering just paid single insurance premiums, at 100%. I mean, sometimes that can create instances for key employees where, based on that participation, that could make them fail a particular non-discrimination test. So you can see here that there are options, right? It's possibly reducing some of the participation from the highly compensated employees, and you're finding a way to increase the level of participation, either those who are eligible for the benefits, but certainly the benefits being offered to those non-highly compensated employees. All right, so red flags. What I hope you will see here through this, as I've gone through this here today, get you thinking, right? Get you thinking a little bit. I mean, as you're, right now you're going through a ton of renewals. Actually, you've had probably a lot of renewal conversations with your clients. And, it's not too late, whether it's a 12/1, whether it's a 1/1 effective date, shoot, maybe even 11/1, is there an opportunity here to look at ways proactively to be able to talk to your clients about specific red flags that you may see, that you want to bring to light, which could cause some issues down the road? Okay, because it'd be better to change it now, right, versus down the road fail a non-discrimination test and then have to make some changes, certainly for those highly compensated employees. All right, so some of these are really kind of no duh statements, okay, that should really jump out to you, but some you might go, huh, what? Oh, okay, well that can happen. All right, so a couple of red flags, got a few of these. So certainly where an employer is going to offer their benefits, the only invited guests to the party are highly compensated employees. Okay, so only highly compensated employees are eligible for the cafeteria plan, the POP plan, your DCA, dependent care, health FSA, HRA, right? So the employer is trying to limit in every way the rank and file employees. Second bullet there, the plan excludes a large percentage of employees. Now, that could be part-time, seasonal, which it could. It can matter as it relates to non-discrimination testing. Remember, I did talk about, well, who's included, what do we count, what do we look at as far as the number of employees, and we're counting all employees, as part of that. So if there is potentially a large part-time population, that can come into play, okay? Because, well, for one, were they invited to the party? Are they even offered? Are they eligible for the benefits, okay? I mean, they didn't even get to the party because they weren't invited. So that could be something that could be a trigger there for that. The last one there, employees in one division of commonly controlled group are covered, but employees in another division are excluded. Now, there can be legit reasons for those types of benefits to be offered at one location versus another. And in fact, in a lot of cases, there would not be any trouble passing a specific test, okay? But it is something that should draw at least a red flag. Understand what an employer is trying to do. How many employees does that affect by offering it in one division or in one location and not offering it in another? It should draw a specific red flag for you. All right, another red flag. Not all employees receive the same employer contribution towards medical premiums. Now, there are absolutely bona fide classes of employees where you have the ability through that bona fide class to be able to offer benefits, right? And what we've commonly, or what we have generally said, right, in all of our webinars that we have given for you is that, if you have determined a specific bona fide class, will be consistent in the benefit that you're offering that specific class of employees. So it doesn't necessarily mean, right, that they can't do that, but it should bring a red flag. You should ask some follow-up questions. Well, what does that look like? Can you explain exactly how you are diversifying that benefit amount, between those employees? An employer with a single cafeteria plan varies benefit contributions and rates for different employee classes. All right, again, very similar to what I just listed, above. I mean, you're varying benefit contributions, rates for employee classes. Again, you need to be consistent. It can happen, it's okay, but understand it. See where there is some absolute red flags where those highly compensated employees, the highly compensated employees, are being segregated out, are receiving a vast greater benefit than the rank and file employees. Lastly, then, a separate cafeteria plan for different classes of employees, such as one that covers hourly employees and different plan that covers salaried. Now, again, classing is acceptable, but you do need to look at those specific cafeteria plans. Non-discrimination testing will be completed for each separate cafeteria plan, okay? And so if one of those cafeteria plans are just heavy laden with highly compensated employees, they would not pass the test, right? So be cautious of that, having separate cafeteria plans. Maybe just have one, umbrella cafeteria plan, right? That would encompass all of those various classes, which could be done. And then on my last slide here in regard to red flags is the last here is just entry into the plan is delayed beyond the first day of the plan year, beginning after the date of employment requirement is met. So, so if you're varying not only the eligibility, but when an employee then can participate, so they're actually partaking in the appetizers, they're consuming the benefit, that's going to be an automatic fail. Okay. Certainly if rank and file employees are the ones that it is geared towards. All right. Next, the middle bullet, different benefits provided to employees due to years of service or percentage of compensation. Big red flags when you are providing differentiated types of benefits, but based off of age, wage, or years of service. Age, wage, and years of service. And it should be an immediate red flag if that's how they are varying their benefits with that due to years of service, certainly compensation, and even age. Employment requirements vary for different employee classes or employee located in different offices or divisions. As you can see, we are talking a lot about, classes, classing employees, either, and that's classing employees by a bona fide class, but it could be by location, division, department, things of that nature that are legitimate. But you need to be, when that is being done, be very conscientious. It should, again, raise red flags, at least in your brain. Take notice. If you need someone to take a look at that, contact PrimePay, allow us to participate and really try to dig deeper into that strategy that employer is trying to adopt. And let's see, is it fine, or do we actually have maybe a problem? So non-discrimination testing. I would have bored you to death if I would have gone through the calculations with you today. But what I want you to get out of it is that it's very important. It's a requirement that is out there from the IRS. The IRS says, hey, listen, employer, enjoy the various tax favored programs that we have enabled you as an employer to partake in. But keep in mind, if you are going to utilize these plans, let's follow the rules. And one of those is that non-discrimination testing rule. Make sure that you're asking the questions whether they have completed them correctly. Let's make sure that they've also passed, because if they have failed, you do need that. It's okay, right? Because if you did it early enough, you should have plenty of time to make the appropriate adjustments so that when you run the test again, you can pass the test by the end of that plan year. All right. So hopefully that is helpful to you. Certainly this time of year, it's a great time of year to be talking about some specific compliance items that your employers should be doing. Don't stray away from these conversations. Dive right in. Go right after it. They trust you and are looking to you for guidance in this area. In fact, their plan year may be coming to an end in 2019. And they have yet to perform their test. You don't want your clients to be out of compliance. So definitely ask the question, certainly push them to perform this test to ensure compliance. We are so thankful that you have taken time out of your busy schedule. I see many of you have provided several questions. Thank you for submitting those questions. We're going to get back to you directly with answers to those questions, so you'll have those here very, very shortly. This month of November always gives, I love this month, not just for the fall season, but for the holiday that's coming up, and that's Thanksgiving. And it just reminds me to continually thank our partners here that have participated kind of along and with PrimePay here in 2019. And we're so thankful for your business. Thank you for your trust in enabling us to work with your clients here in 2019, and certainly look forward to participating with you here in the coming year in 2020. If you guys have not seen or have not been notified, we have some wonderful year-end promotional pricing. And so I will want you to get to Broker Concierge. You'll see the number and the contact information here on the screen. Please feel free to reach out to our Broker Concierge team. If you are unaware of our current promotional pricing, get connected with us. We'd love to share what we're doing there that would enable your clients to actually save quite a bit of money in administrative fees as it relates to our benefit and compliance services, and actually also too our payroll services as well. So please get with our team, our broker concierge team, so that we can discuss that with you. That will conclude our webinar here today. Thank you so much for participating, and have a wonderful month, and I wish you the best during this crazy busy season that's coming upon us. All right, have a great day, and we'll see you soon.